We're in Denver, Colorado at EnerCom's 19th annual Oil and Gas Conference. I have the pleasure of welcoming Jeff Ventura, the President and CEO of Range Resources. Good morning, Jeff.
Good morning.
October 2014 will mark the 10-year anniversary of the industry's first Marcellus well, a well that was drilled by Range Resources. What has the Marcellus done not only for your company, but for the U.S. energy supply picture?
Well, I'll start with, for Range, it's been a great success for Range. Range did drill the discovery well in October 2004, 10-year anniversary. Since then, it's been a big part of our growth, and importantly, it's been a big part of our share price growth. Our share price over that 10-year period, Range has been one of the best performing stocks really on any indice. We think we have an exciting future in front of us, but it's been a great 10 years. Importantly for the state, it's led to more than 240,000 jobs for the state of Pennsylvania. It's led to industry activity pickup. It's led to lower utility bills, things like that. So it's been good for Range, good for the state. But if you think about it nationwide, what the industry's done is taking that technology and applying it not only to gas plays, but also to oil plays. And the United States now is the #1 gas producer in the world. Our oil imports have dropped from, in the mid-60s now to 40% and dropping. So it gives us a chance to ultimately maybe become North American energy independence, within the next decade or less. And if you think of it, that's good for the U.S. It's led to a number of, it's a job creator, it's helping with the trade deficits, it's helping with really national security, and it's helping to revitalize American manufacturing.
Now you plan to triple your production levels. How will you accomplish this?
Yeah, we've had an exciting past, but looking forward, we think we have the opportunity to basically triple from where we are today. We're about a billion cubic feet per day equivalent company. We think we can take that to more than 3 billion per day. We have the largest acreage position in Pennsylvania. It's roughly 1 million net acres. When you consider the stack pay potential, it's more like 1.9 million net acres. So we have the acreage, we have the wells identified, we have planned for the compression and processing capacity and the transportation to get us to more than triple where we are today.
You built your Marcellus unit to capture full value of your gas flow through the extraction and exportation of ethane. How do you, how will this benefit your realized prices?
Yeah, our marketing team's really done a great job. When you look at our ethane portfolio, the third piece of that will be up next year. The first two are already online to bring ethane to Canada and to the Gulf Coast. This one will bring ethane to Philadelphia, to Marcus Hook. When you look at the contracts with those three ethane solutions combined, for Range, net to selling ethane as gas or as BTUs, it's more than a 25% uplift versus, and that's net of processing, net of transportation versus selling ethane as gas. So it's a big uplift. And to make it even, put it in simpler terms, on an annualized basis, once all three projects are up, it'll increase our net cash flow by more than $100 million per year.
Range has one of the best transportation portfolios in the basin with one of the lowest cost structures to match your growth profile. How have you been able to do this?
Yeah, I think it comes down to the quality of the play. The Marcellus is the largest gas field in the U.S., ultimately maybe the largest in the world. It has really high quality rock. Range being a first mover, we were able to identify what we think is a core area, and really the core area with the best stack pay potential and the liquids rich part of it. That not only gives us the growth, but as we grow production, and because of our corporate strategy to focus on costs, we've been able to grow with increasing capital efficiency and with lower cost as well.
Jeff, since 2008, you have reduced your finding and development costs and reduced your total per unit cost by 38%. How have you been able to generate such large production increases at such low costs?
Yeah, and again, I think it's really comes down to quality of the rock is a big piece of that. So a lot of people look a lot at the production growth, but the cost that you deliver at is critical. If you look at our second quarter numbers for this year versus last year, unit costs were down 42 cents, which is really impactful. And as we continue to grow in the future, I think you'll continue to see growing production with lower unit cost.
Well, Jeff, it's been a pleasure to have you here. Congratulations on the 10-year anniversary, and we wish you nothing but success in the future.
Well, thank you very much.
Thank you. Jeff Ventura, Range Resources.